Picking the best investment for 2023 is perhaps a little bit easier said than done. After all, nobody truly knows what's going to happen in the stock market, let alone any given specific stock. There are a handful of true visionaries out there that perhaps defy the odds, but these individuals are very few and far between. Some may say that such success in any given field is a combination of skill and luck. Your average investor that started out in 2003 versus the average investor that started out in 2008 could have exactly the same set of knowledge, but an element of luck certainly fell on the side of the individual who started investing in 03 versus 08. There is a mathematical probability of investing success, but in order for me to be able to calculate it, well, it's far too complex, driven by how many variables are at play. Some of those variables being the year that you were born, the year you started investing, the economic cycle that you were in at that time, the number of stocks that you invest in, the length of time that you can invest for, and the list really does go on. And while some of those variables are completely out of our control, what we do need to focus on is what's within our control, as a handful of our own decisions and actions will make up for the majority of our successes or failures. Let me elaborate on this by taking you back to the roaring 1920s when a famous animator known as Walt Disney went into business. Despite bankruptcy on his first studio and hardships along the way, by the late 1930s, it actually made over 400 cartoons. The only downside being Disney was struggling to make money because the cost of animation and production cost him an absolute fortune. That was until 1938 when he released Snow White and the Seven Dwarfs, which absolutely changed everything. $8 million earned in its first 6 months completely transformed the trajectory of Disney Studios and firmly put Walt Disney on the map. Nearly 20 years of failure just for 83 minutes of film, which made all of the difference. Now, whilst Disney did go on to be a great success story with theme parks all over the world, a mega film franchise, Disney Plus streaming services and so much more, what do you think the probability was of this company, which went bankrupt back in the early 1920s, today being worth $167 billion and providing investors nearly 7,000% return on investment? Perhaps a very tiny, minute fraction of a percentage. But why exactly am I telling you this? Well, it's because you and me as investors have the same fairly unlikely chance of actually picking an individual company that goes on to achieve great success.
Great success.
Now, as of right now, there are 58,200 publicly listed companies, which means that you're certainly going to need a hell of a lot of skill and also a sprinkle of luck in there too to make a 1 in 58,200 stock pick. But let's be honest, just like Walt Disney went from zero to hero, stranger things have happened.
Dancing on a steamboat when Dopey slips and falls right through the railing.
But when I'm investing, I prefer to have a high degree of certainty about the largest proportion of my investments. I like to stack every ounce of probability in my favor based on the decisions and actions that I take to give me the best possible chance of success, which is why the best investment of 2023 isn't going to be the latest coin, and it's certainly not going to be the next great hot stock. And in actual fact, it's going to be an investment that stood the test of time. And when I say stood the test of time, I really do mean a multi-decade investment that has a high degree of probability to be worth more at the end of my investing lifetime versus being worth nothing at all. Let me tell you something that shocked me when I was actually doing some research for this video. The statistic goes 88% of Fortune 500 companies in 1955 no longer existed in 2014. That means over the past 60 years, nearly 9 in 10 companies went completely out of business. From making billions and billions of dollars to being worth not a single penny within the space of a few decades. And what's even more crazy is that there was a report written by JP Morgan in 2021 called The Agony and the Ecstasy, where they actually highlighted that 44% of all companies in the Russell 3000 experienced what they've called catastrophic loss between 1980 and 2022. Now, for clarity, JP Morgan defined this term catastrophic loss as a 70% decline in share price from peak levels, which is not yet recovered. And let's hope Tesla stock isn't another one of these to add to the statistic. But in all seriousness, what I am trying to highlight here is the higher degree of risk associated with having all of your eggs in one basket, so to speak, to provide you with all of your investment returns over a significantly long period of time. I'm currently reading this book called The Psychology of Money, which I'll leave a link to down in the description below. And there is a line in it that I want to read to you guys about Warren Buffett, and it says, at the Berkshire Hathaway shareholder meeting in 2013, Warren Buffett said that he actually owned 400 to 500 stocks during his life, and he only made most of his money from about 10 of them. So even one of the most prolific investors on the planet today, and one of the most successful investors that we've ever seen, only managed to reduce his probability of success down to about 1 in 50 companies. And there are a good few reasons for that. Buffett's been in the game since the early 1940s with over 80 years of investing experience. That's a hell of a long time to keep up a good track record, especially with the amount of change that's happened during his lifetime. For context, here are the top 10 companies in the Fortune 500 in 1955. A handful you probably recognize, but some of them I can guarantee you probably never knew existed. Whereas this is a list of the Fortune 500 companies today, 90% of that list is different, which kind of got me thinking, well, what will that list look like 60 years from now? What would the world look like without high-performing Apple, Amazon, and Alphabet? Will these companies still be the top of the food chain, or will the new kid on the block come around and actually gone to take their place? That's a thought that's quite difficult to comprehend, but I think it's certainly something that we need to be open-minded about, because statistically there is a high probability that the companies of today will become the companies of old, and it's likely that that will actually happen in our lifetime. And whilst Buffett clearly has a good track record for making some very good, very profitable investments, it's not just been about actually acquiring the shares and holding onto them for the long period of time. It's also been about actually accurately timing the exit of those investments too, which to do successfully over an 8-decade period is certainly pretty phenomenal, and probably something that the average investor simply won't be able to go on to achieve. Which kind of gets me back to thinking, well, how do you overall mitigate that single company risk from any given investment portfolio? Because let's be honest, the future of the stock market and individual stocks is very much an unknown. So how can we, with that kind of inability to accurately predict the future, still put all of the odds in our favor in order to make sure that we're successful over the long term? Well, there is one single investment that Warren Buffett says that everybody should make, so let's take a listen.
The best single thing you could have done on March 11th, 1942, when I bought my first stock, was just buy an index fund and never look at a headline, never think about stocks anymore, just like you would do if you bought a farm. You just buy the farm and let the tenant farmer run it for you. And I pointed out that if you'd put $10,000 in an index fund that reinvested dividends, and I paused for a moment to let the audience try and guess how much it'd amount to, and it would come to $51 million now.
Now, whilst Buffett suggests that investing into the S&P 500 is the best investment that you can make, what's your actual probability of success? Visually, we of course know it's highly likely, because the chart trends upwards over time. There of course have been a few blips along the way, but generally speaking, it's gone in one direction, and that's up. Looked at on an annual basis, however, it looks quite chaotic. At a micro level, I guess it can be very volatile year from year, kind of like the contrast that we saw between the stock market returns of 2021 versus the stock market returns of 2022. But the longer that you're invested for, the higher your probability of success. Whilst we now know that the probability of investing into an individual stock being successful over the long run is highly unlikely, what we do know is actually when we put all of those stocks together in one collective stock market fund, actually the percentage or the probability of us being able to be successful within that investment is quite close to a downright certainty, and the statistics certainly back this up. Over the past 100 years, if you invested into the S&P 500, but you only did so for one single year, you had a 74% chance of success. If you invested for 5 years, you had an 86% chance of success. For 10 years, it went up to 94%, and after 20 years, you had a 100% chance of being successful from historically investing into the S&P 500. So based on where the highest probability of success lies, an investment into something like a Vanguard VUSA S&P 500 ETF certainly feels like the way to go. It's where I personally started investing back in 2017, and it's where I'll continue to be investing throughout 2023 as well. And if you would like to see my full investment portfolio, and don't get me wrong, some of it isn't quite pretty after last year's performance, then be sure to drop a like on this video, guys, as well. Let me know down in the comment section below. But before you go, if you do want to know a little bit more about where the experts predict that the stock market is going to go throughout the course of 2023, then be sure to click on this video next. With that being said, I'll see you over in the next one.